So coming into today, I thought we were going to have a more quiet sideways day coming off of that 3-day weekend. Turns out we've actually had quite a bit of selling. So bear trend, what is the idea in a bear trend? It's only looking to be short. So if I see a day like this where we've had 8 bars down, 9 bars down, the pullbacks are small, now we're getting into like 11 o'clock and we've pretty much been straight down. There's two things that I'm thinking about. One is that we're still in the open, and the open often reverses. So I'm just aware of that. The second thing I'm thinking about is that we're in a bear trend. So I want to only be shorting. So as long as the market is in a bear trend, forget about the idea of trying to buy. So with the market going down and in a bear trend, I mean, really, I could mark most of these bear bars as being shorts. So, like this bear bar, what is your idea here? Well, you're trying to sell below. Maybe you put your stop above the bar or above the high of the day, and then you're trying to go for 2 times your risk and somewhere down here. So let's see if you did that above the high of the day like that, 2 times your risk. And basically, you just hold until you get down here. And really, I could mark all of these little pullbacks like that. So pull back here, 2 legs back, first leg, pull back, second leg, bear bar. And once again, what's the idea? It's trying to short below bear bar like that. And one thing that was concerning me though was that we were so strong in the open, and a lot of the time you will get some kind of opening reversal from that. So that reduced the amount of types of shorts that I would try to look for around this area. So what I was thinking, as we were getting closer to the 11 o'clock time, the market might be looking to reverse up around this because it's one of the transition times, right? As we're going from the open to the middle of the day. So probably not looking to sell as aggressively during here. But just because we think the market might be reversing soon does not mean we should try to be buying. Okay, so 50% of the time something like this will reverse up, but the other 50% of the time it continues down and it continues in that bear trend. So even if you avoid selling, you should not be trying to buy. Another way to trade something like this is, the entries, there's not so many like pullback type entries, like pullbacks to the moving average like there are over here. It's mostly just this channel down, this diagonal channel, and it's fairly strong. So when you see that, and there's not that many great like pullback entries, so let's zoom in here. You kind of have more, like you get a bear bar, a second bear bar, a third, and they just kind of trickle down and stair step lower and lower. I mean, what some people do is they'll just sell somewhere and they'll just hold short and they'll put their stop up here and they'll just let the market keep going down until there's a major trend reversal pattern. So until we get above the moving average and clearly break higher, then they'll just hold short. But another way to do it, if you're not getting good signals, but you are going down, and is go to a lower time frame like the tick chart. And then there might be dozens of bars just in this one 5-minute bar. So you have a lot more room to try to find entries, and then your total risk and reward would be smaller by doing that. So instead of trying to take one large trade, like if you short here, and then you don't want to risk 20 points, and even then you might get stopped out and then the market might go lower. So instead of doing that, you could risk like 5 points on a lower time frame and then try to take several of those trades as the market's falling here. So that allows you to have more entries. Here, when we got more into the middle of the day, around noon and around 1 o'clock, this is what I was starting to think about. So I had a trend line through here. And what happens after you break out of the trend line? Well, you're looking for a retest of the prior low. And you want to see if the market can try to get a major trend reversal going. So we have a bear trend. And so far, this is just a minor reversal. So we just need to see more for a major trend reversal to happen. And until that happens, you really should avoid trying to buy. So at this point, we've had 2 legs up, first leg, second leg. And they found resistance at the moving average. So there's probably going to be sellers. Well, it's already proven itself to have sellers here. And now after this bear bar and 2 legs up and a bear trend, reasonable to try to be going short here. So we have a bear bar at the moving average after 2 legs up. We have this support level, and this is from a prior low on this day here. So anytime you're kind of far away when the market is falling like this, then you can look to your left and look at some of these key points. So I have one here, another one here, or down here, and those can be targets for where the market might go to. So after this trend line break, we're expecting the market to test this low in some way. Then you get 4 bear bars down. After this 4th bear bar, I thought the market would have at least a little bit more lower, or it would at least turn into a trading range first before going into a bull trend. So I actually did sell this close, and I was able to scalp out over here. And so that was kind of part of my plan, was either we make money quickly or we sit through a trading range and then have to scale in, but then can at least avoid taking a loss. So sold here and then got a little scalp out. During that, the market got these sideways bars here. So we had about 6 or 7 or 8 bars that got smaller and we're going sideways right here. So I would call this a tight trading range. So tight trading range. Another way you could look at it is a possible final flag. So a final flag is a sideways move like this that's somewhat late in the trend. And you'll often, this will be the final pullback of the move. The next move down is that final move. And it looks like that's what we might be getting here. So trend, final flag, final push down, and then reversal up. So because of this being the final flag, and because of this sideways movement, I would rather avoid trying to short here. I see it's a second entry short and a bear trend, but it's also getting later in the day. And there might be that major trend reversal attempt I was talking about here. So break the trend line. Now we've tested the low. We might try to resume up here. Or we might go lower, but then this might be that final leg down. So you can see the shorts would have worked here, but I would rather just avoid trying to sell there within this context. Here's the daily chart. Sure looks like it's trying to come down here and test lower. So what levels would I be looking at here? One is the 5,000 number, because it's a big round number. It's an important number. The other is the open of this big bull bar here. And both of these are coinciding. They're both right around the 5,000. So to me, well, this is probably going to be an important level, and the market will want to try to test that. And so if we can get this much selling today, we'll probably try to test that this week. Maybe not tomorrow, but probably this week we'll probably try to come down here and see, are there sellers at that level or are there buyers? So, the number in my head for this week is going to be 5,000. It'll act as a target. So if there are shorts, if there's possible short setups, then I might assign them higher probability, knowing that there's a important target below like this. Like it's a very obvious target. And there's confluence at this level. And also, if it does get down there, it will probably act as some form of support. So probably buyers at that level, and they'd probably be willing to scale in lower. So even the market goes lower, I think we could expect there to be more of a trading range market. So probably buyers at that 5,000, they're going to scalp out for whatever. Maybe they go for 20 points or 100 points, whatever they're doing. And if it breaks below, I think it'd be okay for them to hold on and buy lower, maybe at this previous low here, or maybe down around this measure move of 4,200, or maybe at 4,000. So their plan is they're going to buy small, and they can scale in lower as needed. And because we're probably going to be in more of a trading range here, even if we do break lower. Even if we come down here, probably not going to sell off too far beyond that, considering the big sell-off we've already had, and we're at this measured move. If we go up, then once again, I'm thinking probably some kind of measure move up, which would put us around 6,000, and then that would be a trading range as well. So yes, so we could have big swings, like the moves could be big, but I don't think those big moves will have very good follow through. So it's more of a trading range type environment. It's more of a scalping environment. If someone's looking at it as from the perspective of the daily chart. I mean, of course, there's plenty of swing trades on the 5-minute chart. But on the daily chart, as you're thinking of like a daily or a weekly context, we're looking more at being a trading range over the next few weeks. And we might have a big sell-off, but probably going to be buyers of that sell-off. Or if there's a rally, probably going to be sellers of that rally. So that's all I have for today. And if you're interested in staying kind of up to date with what the market's doing throughout the day, you can join the Discord. And like Papa Taco 25, he was in here. We were having some conversations about what the market was doing and thoughts what the market might do. And he was kind of sharing one of his trades there. So consider joining the Discord, and we can kind of talk during the day about what's going on. Updates on the trading course. The trading course is nearly done. So almost all of the recording and all of the PowerPoints are done. It's up to 21 hours now. So it's probably going to end up being about 22 hours. So that's a very comprehensive course. It's been several months in the works. I mean, it's been 5 or 6 months now being worked on. 22 hours, right? So it would take you a whole day to go through the entire course, and it's slides looking at different charts, different patterns, explaining the different patterns that you see, why trades are good or bad. So here are some examples of some of the different ideas. So these are all different PowerPoints. These are different lessons that are in this. So math behind a profitable trade, how to study your charts, how to trade trends or trading ranges, how to trade different times of the day. So a lot of really important things are going to be in this course, and it's really everything that you need to know. And I mean, pretty much everything that I know, I'm putting into this course. So you're going to have all the information that I've gained from 12 years of this trading experience. Another update is that I was invited to go to Puerto Rico kind of last minute. And so I accepted it. So I'll be going there for a week, and that might delay the course just for a couple days. But it'll just be a couple days. So we're looking at, release date in 2 weeks, and that course will be live and ready to watch. So I hope everyone's trading is going okay. I know these big moves they can be scary, or they can pretty quickly impact your account, on the good side or on the bad side. So just make sure you're trading small. Don't trade in places that you're not confident in, and try to focus on trading with the trend. We have lots of large moves, so those trends have lots of room to move. All right, guys. See you tomorrow.